Have you ever wondered about the current state of the U.S. economy? Is it a time of growth, or are we on the brink of a recession? Chapter 1. The Economic Outlook and Recession Risks. Economist Stephanie Pomboy paints a sobering picture of a slowing U.S. economy, suggesting we may already be in a recession cleverly disguised by fiscal stimulus. Our tale begins with key indicators such as weak retail sales, which have seen flat unit growth for the past 4 years, deteriorating consumer sentiment according to the University of Michigan survey, and a rather bleak employment outlook. There's no room for partisan interpretations here. The economy isn't a Democrat or a Republican. It's a reality that transcends politics. Meanwhile, state and local governments are grappling with fiscal strain due to pension shortfalls. The potential solutions, tax hikes or spending cuts, could further dampen growth. Chapter 2. Market Corrections and Policy Shifts. Enter Scott Bessent, Treasury Secretary. He and the Trump administration acknowledge the need for a market detox from excessive government spending. They signal a tolerance for short-term pain to restore long-term stability. A market correction, a 10% drop, is seen as healthy. But a deeper downturn, say, a 50% equity decline, could trigger deflationary pressures and recession via reverse wealth effects. Chapter 3. Gold's Surge and Asset Valuations. In this chapter, gold takes center stage, hitting $3,000 per ounce. Central bank purchases and burgeoning Western investor interest fuel the rise. Despite this, gold remains undervalued relative to equities. For instance, the S&P is at 200% of GDP versus a historical 77%. A mean reversion could favor commodities or real assets over paper assets. Physical gold demand signals a shift toward tangible stores of value amid dollar and equity market uncertainties. Chapter 4. The Labor Market and Fiscal Policy. Job market risks loom ominously due to federal and state spending cuts, reduced immigration, and gig work slowdowns. Consumer sentiment on employment is at recessionary levels. January's economic data, such as retail sales and payrolls, underperformed even seasonally adjusted lows, suggesting an accelerating weakness. Output. Chapter 5. The Outlook and Risks. The odds of a recession are high due to weakening consumer spending, corporate earnings revisions, and potential cascading layoffs. The debate is now whether we're heading towards stagflation or deflation. Asset deflation, such as a stock market correction, could spill into broader disinflation, depending on policy responses. In conclusion, our story reveals a precarious economic landscape, with elevated recession risks, markets on the edge of correction, and gold emerging as a strategic hedge. The policy decisions and market reactions in the coming months will play a critical role in determining whether we're on a path of recovery or further decline. This ends our exploration of the U.S. economic outlook and its associated risks. A tale of caution, perhaps, but also of potential opportunity.